Welcome to The Explainer. Today, we're jumping right into a professional-grade market breakdown from Elite Trade Radar. We're going to focus on one of the biggest tickers out there, the QQQ. So, let's get straight to it.
Okay, before we dive in, we've got our standard disclaimer. Just remember, this explainer is for you to learn. It's for educational purposes only. It is not, and I repeat, not financial advice. We're here to break down the analysis, but you've got to do your own homework before making any decisions with your money.
All right, let's set the stage. We're looking at the QQQ, that's the Nasdaq 100 ETF, and the analysis is for today, Friday, August 8th. Now, this is really important because a Friday plan isn't just about trading today, it's about how you position yourself for the entire weekend and get ready for Monday's open. So now that we're all on the same page, are you ready to see the actual trading plan? Elite Trade Radar has laid out a super clear map with specific price levels and some really smart if-then scenarios. Let's break down that map right now. Okay, let's get into what we're calling the QQQ battlefield. You know, every single trading day is this big push and pull between the buyers and the sellers, and that fight always happens around very specific price levels. Think of this as our strategic map for all the action today. As of this analysis, the price is sitting at 573.80. Think of this number as ground zero. It's the pivot. It's the center point that the entire day's strategy is going to revolve around. Every single play we're about to talk about, whether it's bullish or bearish, it all starts from this number right here. And here they are, the two most important lines on our map. You've got support. That's the floor where the buyers are digging in at 50.70 even. And then you have resistance. That's the ceiling the sellers are defending at 574.20. The whole story of today is probably going to be written between these two numbers.
So now, let's get tactical. With those levels as our guide, we can build a playbook for the morning session. And it's got two really clear opposite scenarios, one for the bulls and one for the bears.
So here's the game plan if you're feeling bullish. The trigger, the thing you're waiting for, is a clean break and hold above that 574.20 resistance. If that happens, the play is to the upside, maybe a quick 575 call scalp or a call debit spread. But what's really brilliant here is the discipline. You have a clear stop loss right below 573.60 and you have defined targets to take profits. That's not a guess, that's a plan. But what if that 574.20 ceiling holds? What if the price gets up there and just gets rejected? Well, that's the bearish scenario. The plan completely flips. You're looking at bearish trades, like a 570 put scalp or a put debit spread, betting on the price to fall. And just look at that exit strategy. If the price somehow gets back above 574, the bearish idea is dead wrong and the plan says get out. That's just smart. Now, let's start thinking ahead. You know, professional trading isn't just about what happens in the first couple hours. It's about using the end of the day to set yourself up for what's coming next. So here's how Friday's close could set up some potential trades for Monday. If you want to set up a bullish trade for Monday, here's the trigger. You need to see QQQ hold above 572.50 as we go into the close on Friday. The trade ideas here might be something like a put credit spread, but honestly, the most important part of this slide is that invalidation column. If QQQ loses 572.50, the bullish idea is simply off the table. End of story. On the flip side, what if we end the day looking weak, below that key 570 support level? Well, here's the bearish plan for Monday. You could look at a call credit spread, which is a bet that the price is going to stay below a certain level. And this right here is what I love about a plan like this. It shows you the power of an invalidation point. If QQQ claws its way back into that 571.50 to 572 zone, the bearish setup is immediately invalid. No second guessing. Okay, we've covered the what and the when, but none of it, and I mean none of it, matters without this next part. This is, without a doubt, the most important section of this entire explainer. These are the non-negotiable rules of the game.
So here they are, the 4 golden rules that this whole strategy is built on. Number 1, strict risk. No more than 0.8% of your account on any one trade. That's how you protect your capital and stay in the game. 2, cut your losses. A 25 to 30% loss on a trade is your hard stop. It's a rule, not a suggestion. It keeps one bad trade from blowing up your week. 3, never ever revenge trade. Emotion is the enemy. And 4, patience. Let the clean, confirmed setup come to you. You don't chase the market, you let it come to your levels.
And you know, it all just boils down to this one powerful idea. This should be tattooed on the inside of every trader's eyelids. Never risk more than you are truly, genuinely willing to lose. That is the bedrock of a long career in the markets.
So, if you found this kind of structured, no-nonsense, actionable analysis helpful, here's exactly how you can make sure you stay ahead of the curve.
So what's your next move? Look, if this plan made sense to you, first things first, subscribe to The Source, Elite Trade Radar on YouTube for their daily analysis. Second, if this explainer helped you put the pieces together, give it a like. And finally, share this with another trader you know who would appreciate a clear plan instead of just guessing. That's the best way to support this content.
And we'll leave you with this one final thought as you head into the weekend. You've seen the bullish playbook, and you've seen the bearish one. You know the key levels that define the entire battlefield. So the only question left is, which scenario are you preparing for? Thanks for joining us on The Explainer.